Hey guys, what's up? What's up? Welcome to another video. In today's video, we're going to be talking about how to design a personalized trading approach, right? Now, having a personalized trading approach is extremely important. What works for one person might not work for others. So that is the main issue with a lot of these communities that are going around, right? You have so many different communities trying to form fit trading models onto entire communities, and that is quite hectic for the person learning. Okay, now the reason why I'm saying this is because you may come into a community, or you may go into a community in which they teach you how to scalp, and their trading models work best for scalping, right? So that may not fit with your psyche, your psychology, because you might be a day trader. Maybe small moves are not enough. Maybe you have that satisfaction of having larger pip hauls. But sometimes, if you join the wrong community, you won't know how to do it. You'll just be stuck with the regrettable idea of, why did I pay money for this? Why did I do this? Why did I do that? Right? So, luckily for you in the Trading Academy, all you have to do is join, send me a message, and I will personalize a trading model for you with you over a Zoom call if you want one. All right. So, the importance of having a personalized trading approach is that, right, you got to trade with something or with a set of rules that you are comfortable with. Okay, and that is what we are going to discuss in today's video. Understanding personal trading styles. So, what are the different trading styles that are there? Well, we have scalping, we have day trading, and we also have swing trading, each of which have a separate time horizon, right? Scalping can be as low as 20 minutes to 1 hour. Day trading can be from 1 hour to a couple of hours, or maybe even one entire day. And then we have swing trading, which can span from 1 week to a couple of months, sometimes even a year. But that is, I'd say, for swing trading, if you take it all the way to a year, it's position trading, right? So what you have to do is you gotta identify what your preferred style is. Now, for example, for me, I prefer scalping and day trading. I cannot hold positions overnight, and even if I do, I'm just going to be anxious about it. So why would I go ahead and trade in a style, or have my trading style set in such a way that it's just going to cause me anxiety, right? I'd rather catch intraday swings up and down instead of getting the same pip haul over a period of time, if you get what I mean, right? So, one of the key components for selecting your trading style is the level of patience that you have, right? Patience is key. You need to have a high level of patience if you're going to be a swing trader. You can have maybe a medium term level of patience if you're going to be a day trader, and you got to be extremely short tempered if you're going to be a scalper, right? Quick in and out surgical strikes. That's pretty much it. That is what patience is going to get you. Your patience determines your trading style. Okay. Now, when you're trading, I'd say that you need to trade, or you need to select a trading model or build a trading model with a defined end goal, right? You got to set clear and achievable goals. Like, for example, right, let's say you're a scalper, okay, and every day you want to go, let's say you are trading gold and you want to go for 30 pips a day, right? So by having that goal of a 30 pips a day, you now have something to work towards. And once you're done getting your 30 pips, you're out. You don't make any more money, you sure as hell are not going to lose any more money. Okay, so always have clear and achievable goals. And my advice is that if you're going to set any goal, any target in mind, it's better if you set weekly targets, okay, as well as daily targets. These daily targets add up to form the weekly target, because if you only have the weekly target, given human greed, okay, given human greed, you are gonna wanna get your weekly target in a single day. Okay, now it is going to vary between each person, but that is the truth. All right, so the importance of having a trading plan, and the importance of linking this trading plan with a defined end goal, is so that you can use this trading plan, you can follow this trading plan, or you can follow your customized trading model for yourself to achieve these goals. Okay, if for example, let's take me as an example. If I'm trading gold, right, for me these days my target is 60 pips a day. So I'll take 30 pips during London, 30 pips during the New York session, and I'll be done for the day. There are some instances in which I go more than that. Well, that's just the greed talking, but when that happens, you have to check yourself, and you also have to risk less. Okay, if you did make your daily target, what's the point in taking another trade just to lose half of it? Okay, or a quarter of it. So it's always better that if you have the impulse to break your rule, or if you have the impulse to just take one more, you better cut your position size by 50%. Okay, yes, you may lose something, but you're losing at maybe quarter or half of what you made, or even less than that. Right? So it's very important that you understand this, that you trade with a defined end goal in mind. When it comes to your trading, okay, there are many different ways in which you can structure your model, right? You can structure your model around fair value gaps, you can structure your model around true liquidity rates, and by now 60 to 70% of you know what a true liquidity rate is, right? That is my high liquidity dealing range purge, okay? Or you can go for Malaysian SNR, or maybe even you can literally combine all of these things to form a trading model, but that is unadvisable. Okay, I would not ask you to do that. I would ask you to just focus on one, right? So even in the trading academy, we have two types of models. We have one that revolves around liquidity and the other that revolves around Malaysian SNR. Okay, so in order to adapt your trading strategies to suit different market conditions, all you have to do is understand how is price gonna deliver for the day. Is it going to be a high resistance liquidity run condition, or is it going to be a low resistance liquidity run condition? And the only way in which you can identify that, or the only way in which you can objectively anticipate that fact, is by using the Trading Academy's price action predictor, which is this one. There you go. Okay, so just by using this, you are able to identify what the potential condition is going to be for the day, and you can employ one or two different trading models that align with your personality for that particular condition. Okay, so in order to make sure that you do this right, I would ask you to get the bias predictor and to get the price action predictor. And of course, if you join the Trading Academy, no brainer, you're going to get these for free. You're going to get the guidance, you're going to get everything that you need to form a personalized trading model that works for you. All right, data driven trading is the game these days, right? It's a game changer, and I'm going to change the game for you guys. All you have to do is just sign up. Simple as that. Oof. Now, risk management. Risk management is extremely important, all right? Your risk management is what's going to promote longevity. Longevity, however the hell you pronounce that, okay? So if you have, let's say, 1,000 bucks, okay? If you have 1,000 bucks and you risk only 2%, that is equivalent to what? 20 bucks, okay? 2% is 20 bucks. Let's say you lose one trade, right? You lose one trade. So that one trade lost is minus 20, right? And you have how much left? You have literally 980 bucks left. 980 bucks that you can make a mini fortune with. Okay, you can literally trade that 980 bucks up to like $2,000, $3,000, $4,000. For some it's small money, for some it's big money. Okay, let's not discriminate, right? So your risk management in terms of keeping your emotions in check, in terms of controlling your greed, in terms of positioning yourself properly, that is what's going to increase your chances of surviving in this game. Okay, and one position size technique that you can use is you can always start with 0.5% risked. Okay, so you can risk 0.5%, and you can keep on risking 0.5% until you made, let's say, 4R. Okay, so 0.5% until 4R. That's 2%. 2% gain, right? Okay, so once you get this 2% gain, what you're going to do is you are going to now increase the risk to 0.75 until another 4 hour. Okay, you're gonna go for 0.75%. Okay, you're gonna go for 0.75% for another 4 hour. So if you're gonna do that, you're gonna get a 3% gain. Okay. Okay. Then what you're gonna do is you're gonna increase your risk percentage to 1%. That's your final one. Okay, until 4 hour again, and you're gonna get a 4% gain. Right? You're gonna get a 4% gain. If you get this, if you get these three trades right, 0.5% for 4 hour, 0.75% for 4 hour, 1% until 4 hour, what you're gonna get is you are gonna get a gain that's equivalent to 8%. Okay. Now let's say you get hit with a losing streak. Okay. Let's say you get hit with a losing streak and you have an 8% gain so far. Okay. You have an 8% gain so far. And your next trade you're going to risk 1% and you lose 1%. What do you have left? 7%. Okay, from here you're going to go back to risking 0.5%. So the moment you lose a trade, you're going to go back to your base percentage, right? So that's 0.5. So now if you lose 0.5%, yeah, if you lose 0.5%, what do you have left? 6.5%. So on and so forth, right? You are literally reducing the amount that you're losing while maximizing your profitability. Okay, while maximizing your profitability. All right, so now when it comes to finalizing your trading journey, when it comes to finalizing what you're gonna do in terms of your personalized trading plan, you need to have a journal. Okay, you really need to have a journal, because by using a trading journal, you are able to learn from mistakes and you can also refine your trading models, right? You can write down, okay, this is what I learned today. This is what happened when I employed my model. This is what happened when this happened. This is what happened when that happened. And you can literally commit that to memory by writing it down so that you don't make the same mistake again. Okay, it's as simple as that. That's what I use my journaling for. All I do with my journaling is I'll look at price, so I'll be like, okay, this is what I did wrong. I'm not going to do it again. And even if I did do it again, it's a me versus me scenario. I have to be better than I was, right? I really have to be better than I was. I have to be better than the person that I was yesterday. It's as simple as that, right? You got to strive to be a better version of yourself every single day. Okay, so strive to do that and that only, guys. That and that only. All right, and finally, to conclude the video, right, I strongly urge you guys to implement what I've spoken about in this video. Try and have a dummy trading model set up just by what you learned from this video, right? And don't forget to like, comment, and subscribe. All right, guys. So with that said, I'll see you in the next one. Good luck and good trading. Bye-bye.